Welcome to AGNT, the podcast for enterprise tech meets the Agentic era. I'm Gemma Allen, joined by my co-host Raphaelle, broadcasting from the New York Stock Exchange. On every episode, we unpack how intelligent systems are reshaping companies, markets, and the way real work gets done. From Fortune 500 boardrooms to breakout upstarts, we're digging into the strategies, technologies, and people defining the next chapter of AI. Let's get into it. Raphaelle, welcome back to theCUBE and NYSE Wired.
Thank you.
What an unbelievable week. I mean, this morning, things were so loud on the options floor behind us that we had some guests who were struggling to concentrate on the interview.
Wow.
And there's a couple of names that we've heard a lot this morning from that floor. We're going to talk about them, the obvious ones, Nvidia, Salesforce. But before we go there, I want to talk to you about one of my favorite reads of the week, your Substack. And specifically, as a creative person myself, Figma. So you have kind of done a bit of a 360 on Figma, right? You were a little bit on the fence and now you're a little bit all in. Tell me what you're thinking.
So Figma is a really interesting company. Look, it was one of the flagship IPOs, like one of the flagship SaaS IPOs of this year. I mean, of 2025, way before this whole SaaS-Pocalypse, right? And when it went public, you had a company that had exceptional figures, like the numbers that they were reporting in terms of like ARR growth, net retention, margins, those were like outstanding. I had underlined in the research that I had done that the numbers were disclosed in a very selective way nonetheless, and that the numbers that were effectively like wow were not on the whole population. Anyways, the company at that time, at IPO, was priced to perfection. Like it was priced much more than companies that were trading at the upper end, like Datadog, ServiceNow, which was trading very well at that time, Snowflake, and I was like, wait, this company, which has impressive numbers, if you put aside, again, the fact that it's selective, which matters a lot, it was priced for this orchestration future as if it had already earned its orchestration future. So it's like, it's not that I don't like the company or that I don't believe in the product, which seems to be very good, though I'm not a user every day, but does it warrant that valuation? I was like, no. So I had a very bearish view. And the bearish view played out effectively during the year because Figma was down approximately 70.8% up until it's like very low, which is, I mean, I know a lot of companies got crashed, but I think minus 70.8% is one of the big cracks. And then last week, in the middle of all of this noise around SaaS is dead, what is happening to SaaS, they launched a very smart partnership with Anthropic by which they're able to really integrate themselves in the orchestration graph, and the word matters, like the orchestration that we have been talking a lot about here, in terms of Anthropic's world, and they built a reciprocity between Code and Canva, their product, by which developers that are doing work in Code are able to see the effect in Figma, vice versa, and so you have like this new frontier between not the human UI but the agentic UI, and in a very smart move. And so when I saw that, I was like, well, look, this is one of the proof points that I had been waiting for to see whether Figma could earn its orchestration future. And so there we go. And so now my position is quite long on the stock.
So here's the thing, right, about Figma. It's a great product. I think it's an excellent brain. It has some very loyal customers and users. But if you think about what makes it its USP, right? And especially from the perspective of defensibility. That MCP protocol, that's repeatable though. Like there's nothing to stop Canva doing that. Adobe, which is already a very, highly competitive product in the space, right? If not, a leading product, like already has some of the integration at its core, right? So when you think about the USP for a company like that, how do you assess its market position in terms of its orchestration layer versus how it has, something unique to its competitors?
Right, so I think that the whole space is really being shaped right now, and I think being one of the first movers actually matters. And so Anthropic had their famous developer day this week, which was expected by like, oh wow, what is Anthropic going to release and who is going to die next, right? Because this is kind of what is happening. Anthropic releases a plugin, stocks go down, and so it's the question is
Look at IBM.
right, who is next? So they had their developer day, and they kind of showed this, okay, we are partnering with the ecosystem, which is not new for me, and this orchestration graph, you need to be positioned in it. So I think first mover advantage matters a lot. Number two, not all horizontal tools, not all design tools are plugged into that yet. So, I mean, it is technically feasible, but like many things are technically feasible. So having a first mover advantage matters. And I think, again, this protocol only makes you like grow to the extent that you already have a very strong user base. You already have a lot of like developer love, right? What Anthropic has. And so I think it's kind of like translating the superpowers that they have in like the current paradigm into the agentic paradigm, if it makes sense. I don't think it's the magic, it's not a magical wand, but it will help them be even better, and hopefully they will also have the first mover advantage. That, I mean, we're very early onto this, and this also matters as long as design actually matters. So maybe like in 2 years this will be completely obsolete, and the moat, which exists as of today, will not exist. It's a very fast moving space.
Well, let's talk with the SaaS-Pocalypse for a second, right? Because I read something I thought was quite interesting as well this morning around, you know, how we're assessing these kind of SaaS tools, right? From the perspective of defensibility and orchestration and entry points, right? Like in terms of how much of your day is spent on any one tool, create some sort of understanding around its future defensibility. But some folks argue that actually the true orchestrators are companies like GitHub, or, you know, the real agentic entry point is around those who provide SDKs or kind of those dev tools, right? Which is really at the very root, like the source of the supply chain per se. Like, what are your thoughts on that, and as a counter argument to the whole SaaS-Pocalypse debate?
Well, so I've written a lot that coding is the wedge. Like coding is one of the first entry points into the enterprise. And so that's where Anthropic has been very smart, we need to say. Like, I mean, I remember writing in August when GPT-5 was out, like, and Anthropic, there was this debate already, like who's winning, Anthropic, OpenAI, etc. And I had said, well, coding is the wedge. And that is how Anthropic is choosing deliberately to have this Trojan horse into the enterprise, because that's where, if you're able to like conquer this territory, then it's much easier to move up stack into like different extensions. So I think they've been doing that well, and I think coding being the wedge and being adopted by developers is critical in penetrating the enterprise in a bottom-up way, like for sure. I think that as we think around defensibility of SaaS, which is the number one question that everyone is having right now, because again, the volatility on the market is just crazy right now, and Anthropic is a big cause of this craziness, right? We're still applying the frameworks that are, vertical is defensible, and so Procore is defensible, maybe, and horizontal tools, well, we can all throw the horizontal tools away. Like, so, I don't know, like Box being a name that comes to my head, and there's others, of course, but that is a very, like, old school way, if I may say, of looking at defensibility. So, it's done because it's vertical or horizontal that something is defensible or not. I propose looking at it this way. Like, first, there's a distinction between systems of records and tools. I think that's two categories that we can make. And systems of records can move up into systems of actions. That's path to defensibility number one that we had explored 2 weeks ago, if I recall well. And then there's tools, and this is where the Figma example comes in. Well, if you are a tool, and if you do not have that pathway from the system of record up, well, how do you plug yourself into this new agentic AI stack, the orchestration graph, and what does that look like? But I don't think to say that because you're vertical, you could be like a very clunky, old and non-defensible piece of software. It's done because you're vertical and because you have data, which is the other kind of mental obstacle that we have. So if a company today is vertical and has data, oh my God, it's very defensible. But no, maybe it's not defensible at all, and maybe a horizontal company, which business is not to have that data, can find a way to be very defensible in a new reality that is just being built day after day. So I think there's a lot of like, I mean, I understand people are trying to put frameworks. That's a part of my work too. But let's really go into the architectural understanding of the stack. Let's go into understanding what the AI labs are actually doing. And so using that as, okay, this is their roadmap. This is how we, as an incumbent, imagine if I was an incumbent software company, this is how we defend and this is how we compose in this new architectural paradigm. And right now, we're not having the right lenses.
So if we think about companies in the system of record to great tools to systems of action space, let's talk about some earnings, okay? And let's talk about the ultimate example of that, Salesforce, CRM. They had an interesting week. Again, like earnings are pretty good, right? Everything's looking very, very solid. They're having a good day. You know, what are your thoughts on that company across the board? Like, do you think that they are an agentic orchestrator? Do you think that this, you know, agentic platform that they are all in on is the multi-billion-dollar solution to staying in the longevity game? Because some might argue as a product, it's chunky, right? And it's the change management is tough. You know, it's not necessarily like seamless and fluid from the perspective of disruptor comparisons, right?
So look, I think CRM is going through like a lot of changes. And yesterday their earnings call was very interesting because they actually had some of their key customers that were in the room with Mark or on Visio, and that were actually explaining how they were using Salesforce in today's context, right? And with their product Agentforce. So first, a look at the numbers. This was their strongest quarter ever, and the level of growth at a company that has this level of ARR, because let's not forget that Anthropic's growth is impressive. I'm the first one to say that. But when you're starting from their revenue base, which is huge, I mean, delivering that growth over 10% year on year, it's pretty impressive. Guidance was very good. And if you look specifically at their numbers on Agentforce, combined with Informatica, their recent acquisition, which forms this assemble from the context at the bottom, Informatica and Agentforce as the system of action, well, the numbers, they were growing at like 169%. I mean, 169%, maybe it's not the 1,000% that Anthropic is growing at, but it's still very huge for SaaS. And so they're demonstrating that Agentforce has that explosive growth and that it's being used in a way that is fundamentally different than the traditional CRM. And this is what their customers, not me, their customers were saying yesterday during the earnings call. So, and the market actually reacted quite positively. I mean, CRM is up 4% just before we started today. So I think they're in the middle of a transition that Mark has been extremely vocal about when he started, I mean, Agentforce at the very beginning, when no one believed that this could even be a reality, which is something we, again, need to recognize and that we had recognized when we were on the ground at Dreamforce this year, right? I mean, they have been having this idea. Now the numbers are starting to translate that into real numbers, real growth, defensible margins, defensible cash flow. Let's see how that plays out, and let's see how this conversion, they introduced also like this notion of agentic work units, which is the first KPI on understanding how agentic work actually is used in the enterprise at their customers. So let's see how this plays out. Look, I think it's in the course of being built. We need to see. Right now, let's see.
When we think about a company like Salesforce, right, and by the way, I will say, like, I've used Salesforce and I've worked on a number of rollouts. It's a fantastic product, right? It's very well integrated. The plug and play is phenomenal across resources like LinkedIn. I think Tableau is a great product too, even as somebody who's Power BI for a very long time. Slack is a great product. But again, they're kind of in some way, they're like siloed touch points for enterprise, right? Like you might be a Slack Teams user and a Salesforce user, you know? Do you think that the real competitive advantage is in like mass integration? Do you think that's why companies like Google or even Microsoft, and I know you have mixed feelings there, have such a kind of like unique position, and that you know, in the agentic world, you touch those products in so many parts and aspects of your day, right? It's not just a data management system or a productivity tool. It's a bit of everything.
Well, look, I think one of the first like laws of value in the agentic world is being close to the user intent. I call this proximity to user intent, and I think that one of their key moats is Slack and Slack bot. And I think that when you're a user and you're like effectively expressing an intent on, I want to have this work completed to produce this outcomes through Slack, I think it's one of Salesforce's most powerful assets. And I think, again, they're in the course of making that a reality. I don't have the answers, but it's work in progress, but I view Slack as a very strong item of defensibility, and Informatica allows to ground that reality and to be that enterprise brain. So it's interesting.
We have to talk about the big earnings of the week. A company that has literally defied capitalism, Nvidia. Like, those numbers, they're monstrous. Like, they're just insane. The stock, Wall Street isn't exactly reacting as I'm sure Jensen had hoped they would, but like, it is insane to think the growth this company is having, right? Like, we had a guest on this morning, and sometimes when we're doing short form content, we ask a guest, hey, what are you listening to? And I expect them to say like Bad Bunny or Britney Spears or something. He said Jensen. I was like there is just such a cult following around this company, right? Like, what are your thoughts on what we heard versus the market reaction?
Look, I've been quite vocal on the fact that with this agentic AI build-out, we are going towards what I term as the inference economy. It's one of my favorite terms. The inference economy. Everything is going to be compute, everything is going to be inference, and we're going to have like outputs that are going to be multiples of compute. Like, imagine that we're doing this show and that we're agents, we would be using compute, right? But of course we're not agents and we're human persons. But imagine, like, you can complete a lot of tasks with like agents, and agents are fundamentally units of compute. And so multiples of the GPUs that Nvidia is selling. So as we progress into the agentic economy, as all of these workloads become agentic in the enterprise, going back to Agentforce that we just mentioned, you're going to have a tremendous use of compute, not for training anymore, but for inference. At the same time, the scaling laws are continuing, and so up until now, you're having like massive use of GPUs for training. So you have like, Nvidia has the training that's going well, and inference. So I think, number one, Wall Street is starting to get used to 70% growth on that base, which I agree with you is not something that is normal, but I think that was kind of, oh, well, if they don't have that number, then we will be disappointed and punish the stock severely. And that's not what happened, because again, the numbers were there, both from a revenue standpoint and from a gross margin standpoint. I think that we're starting to have doubts. It's really around, I mean, back to the circular economy thing. And I've always said, like, if OpenAI doesn't get their financing, we have a big problem. And I think just this week we saw, oh, well, actually Nvidia is, they're not that convinced that they're going to really invest in OpenAI.
Also, on the circular financing, we saw some very novel kind of deals this week too with AMD and Meta.
Right.
You know, these like mass kind of codependencies.
Sure.
You know, in a whole new sphere, right? We haven't seen those types of scenarios before, really, not at this level.
No, and I think Wall Street is starting to be, is very nervous around that. And to some extent, that's reflected in the earnings. It's like, well, you take all of this around and, okay, who is buying all those GPUs? What is the probability of that financing? Well, AWS now is conditioning that, like Amazon is conditioning that to either they reach AGI, which is a very strong technological milestone, or they go to IPO, but to go to IPO, they actually need financing. So what do we do with that? Nvidia is going to give them like $30 billion, but it's kind of like Nvidia needs to give that money to OpenAI because OpenAI is buying their GPUs. So look, I'm very confident it's the inference economy is more than real, and this is happening. And Jensen has been very vocal about that. Well, I agree.
Maybe just to counter the Nvidia being the, again, the lion, and I'm sure they will continue to be the lion, there's no denying that, but to counter the argument as Nvidia is the only show in town in the inference economy, right? One thing we do hear sometimes from some of the incumbents, or some of the chasing pack, that are chasing the incumbents, is that the training world and the inference world from a kind of GPU chip, from a structure perspective, is quite different, right?
Oh,
and
yes.
Blackwell is exceptionally hard to ramp. Even some of the kind of, requirements you have around rolling out NVIDIA chips across data centers, like, it's huge. So they have a supply chain clog issue. So there is definitely, it seems to me, space for some of these chasing pack members to make some ground on them, right? Especially if inference is creating a whole new capacity layer
Oh, for sure. I mean, I'm very long on AMD personally. Like, I mean, I love AMD, and so they did announce a very key partnership with Meta this week. So, I mean, I love that company, and I think they have a very strong play.
Phenomenal CEO, female.
Right? Maybe that's one of the... she's great. So, I mean, I'm very bullish on AMD, and I mean, again, they were also doing circular financing. I'm not saying that it's bad. I'm saying the market is nervous, and we need to be careful, especially when it's around a company that is OpenAI, so it's not circular financing in general. If we can avoid, that's better. But I mean, that is happening. So let's not make a judgment right here. But there's other companies. Of course, there's AMD. There's all of the TPUs that could be used for inference, and there's a lot of developments that are happening around there right now. The chips that are being built are mostly for training purposes, but there is an expectation that it's going to migrate to inference. I've always said that like neoclouds are not specifically meant to serve inference workloads. We have CoreWeave earnings in a couple of minutes, right? Like, this whole market is changing, where I think Jensen is completely right. It's that inference is going to be so much bigger than we think it is, because you have to translate the whole economy into everything is compute. I still hear some hedge funds that are like, are you serious? This is really happening. We're becoming compute. Yes, and so there's an arbitrage between human labor and compute, and then you go back to the physical bottleneck. Well, then do we have enough electricity? Do we have enough this and that? Like, what do we have that could be a physical bottleneck, like atoms meets bits, that could make this inference economy not be true? So this is the nervousness. I don't think it's a reaction to the numbers were bad. The numbers were really good. So I don't think there was any disappointment here. It's more, okay, well,
it's a fever dream time.
Yeah, the magic effect like has gone. I mean, to some extent, the deal that AMD announced, I mean, we didn't have like plus 20, 30%. You have companies that are not that great that are going up 30% after their earnings. So, I mean, Snowflake announced amazing earnings last night. The stock was up. The stock is like trading, I mean, almost in neutral territory. So, look, things are difficult to understand at some points, but the direction Nvidia is going is the right direction, provided that the whole thing doesn't blow up with OpenAI, which we need to be careful about.
Okay, to finish, let's talk about a company I think we seem to talk about a lot, but let's finish on this, Anthropic. Really interesting week. I mean, their COBOL revelation in terms of what, Claude Code can do has certainly had some big impacts on IBM, and, it impacts the market broadly, right? They've also had an interesting week geopolitically and politically.
Right.
I mean, we saw the news around the Hegsworth meeting. They have until tomorrow, I guess, really to decide if they're going to bow the hat or not.
Right.
Who knows? Like, what are your thoughts?
Look, I think from an investment perspective, Anthropic needs to be understood as track Anthropic, and you will get a sense of what is happening. I mean, again, we had Claude Code, then we had Claude Cowork, then we had the vertical plugins, then we had Claude Code security, right? And it's going one by one. So what comes next? The developer day they had on Tuesday, everyone's like, oh, this is cool. No one is getting killed, and actually they're having a friendlier approach. That is not the question. Again, the question is, what is Anthropic building that is the new platform that both OpenAI and Anthropic are building, and how do you fit into that?
Here's the thing though, right? You say understand Anthropic and you understand what's happening in the market. But if anything, this week has shown us that really when it comes to the reaction of the markets to these tech companies, often the folks that are perhaps making the decisions maybe don't fully understand the technology, because Claude Code security is a perfect example of that in terms of what it did to CrowdStrike this week, right? It's not necessarily competing at a code vulnerability level. CrowdStrike actually operates in a very different part, a different space completely, right? But the market's reacting to like heightened narratives. Not necessarily to exact product realities, right?
Well, look how the market, if I may, reacted to the Citrini research report.
Insane.
I mean, isn't that insane? And you have Citadel that is responding to that article. I find that, and the French press, I'm French, like actually covered that. So it's like, wait. So I'm more surprised by how people are reacting, because right now everyone is trying to get a sense of what is happening. We have been talking about this for months and writing on that. Like, there's a new reality. It is called orchestration. You need to understand what is being played out. You can have actually very clear analytical frameworks to understand and not go like, oh my God, and panic on every single announcement, because otherwise that's not how you can run an economy. Like, oh, this company is down, like, I mean, poor companies, right? American Express, Capital One, Visa, I mean, they have nothing to do with Anthropic. They get like, oh, minus 5%, minus 7%. To be a bit provocative on cybersecurity, I do think that like security is moving, number one, to the cloud and is moving to the LLMs, and security is becoming a feature more than a product. And so I do think that even though on the CrowdStrike specifically, there was overreaction and the product is different, but I do think that CrowdStrike, Zscaler, and their earnings are this week, are trading in very high territory, and that SaaS cybersecurity is not immune to what is happening. In the same way that JFrog completely went down last Friday on the day that Claude Code security was announced. So I think there's always like a bit of truth and a lot of like panic.
Yeah.
But you must always, I like looking for the bit of truth and use that as like, oh, okay, what's next? Because the market is not completely irrational. There's a lot of irrationality, but there is also a bit of reality. So let's track what is true, and then it's our work to like pull the thread and try to make sense out of all of this, right?
You know, if anything, maybe we'll end on this. It was a great week for Substack because it's showing the power of that platform. So right. Raphaelle, looking forward to seeing what you have to say on Substack this weekend. And yeah, and look forward to having you back here in 2 weeks. And again, I know we say this all the time, but God knows what the future will hold between now and then.
Thank you.
Thanks so much for listening to AGNT. Tune in next time.